Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. Another week has kick-started. Remember, we've already seen 3 consecutive weeks of losses for the markets. Even on Friday, we snapped a 2 days of bounce and again ended sharply lower in trade. And again today, as the pre-open indicated, we are looking at a start below 23,000 when the markets open in just about 5 minutes from now. 22,940 is the indicative price at which the pre-open trade has settled for the Nifty, 0.6% lower, a percent lower for the Nifty Bank as well. 486 points of a loss is being indicated. All the sectors are indicative of a lower start, with sharp losses being seen on metals, IT, small caps and consumer durables. Over a percent kind of losses being seen right there. Let's welcome our guest on board. We have Mr. Vineet Bullinchkar joining in. He's the head of securities at research at Ventura Securities. Warm welcome to you, sir, and thank you so much for taking the time out. This is the all-important budget week that kick-starts today. Of course, all eyes will be on whether the budget can finally get steam back into the markets right there. What are your own expectations? How are you really looking to strategize your positions right ahead of the budget, sir?
Ahead of the budget. There are a couple of things that we need to look at. One is the Black Swan event, which has just occurred on over the weekend. That is the DeepSeek, which has been
Yes.
released at fraction of the cost of the what the others are spending. And secondly, is that the Japanese just raised their interest rates to 0.5%, and the yield stands at 0.71 for the yen. So this carry trade and this DeepSeek is going to be a double whammy occurring for all the global markets, and we are starting weak today. And I think that we are going to see some further downside pressure build up. And most of this is going to be across IT stocks because we've seen the Nasdaq is down almost 370, 380 points. And we could see this accelerate eventually as the week pans out.
Right. Just to get all our viewers updated about what Vineet is really talking about, DeepSeek, which is a relatively lesser known Chinese AI startup, has sent shockwaves through the Silicon Valley in the US. We're already seeing the futures of the US see sharp cuts because of the release of cutting edge AI models developed with remarkable efficiency, offered as an open source. It could be China's ChatGPT moment, is what you could say, probably. Some are indicating, and therefore they are creating these models at a fraction of cost of what the biggest giants, the giants like Nvidia and all those, have been creating. And this is probably leading to some kind of a question mark as to what is the future of these big deep tech technologies which have so far made a lot of money for investors, and what is the future right there. Vineet, last week was all about how Donald Trump is going to be coming in. What are the statements going to be coming in out from there? That was extremely being seen as an overhang for the markets. Uncertainty from there could be something that the markets were worried about. And now this new trouble that you're indicating to that's emerged over the weekend. How should an average retail investor really look at their portfolios, which are already bleeding over the last 3 to 4 months odd?
See, there are a couple of things that you need to understand is that in 16, 17, when the Japanese when the Americans cut their tax rate from 35 to 21%, next couple of years, we saw a lot of funds outflow from India. And another country called Hungary also cut their rates to below 10%. So they attracted 20% of India's GDP, India's flows. So it's going to be a catch-22 for the government, because if the Americans drop their rates further, can our balance sheet take on this competitive tax cuts? That it remains to be seen, and will we be able to attract flows? So my view is that guess not, and for that reason, I think that we could see some more further tax flows, money FDI flows as well as FPI flow out of India going ahead from here.
Right. Let's look at the opening rates first. The markets have opened, as it was being indicated, below 23,000. We are seeing that the markets have opened at 22,940 odd levels, 150 points lower. The Nifty Bank at 47,922. It's already lost 430 points right in the initial tick. Now, among sectors, barring the gains on the realty, rest all of the sectors are opening with losses. Small caps again taking a beating, 1.87% of a loss, and further escalating downwards for the small caps. Broader markets taking a sharper beating. Metals are down 1.4%, consumer durables down 1.2%, IT stocks 0.8% as well. But the realty space 0.8% higher. Some of the movers on the positive side on the Nifty are Britannia, Dr. Reddy's, HUL, Sriram Finance. Of course, brokerage houses upgrades have come in there. Nestle, so absolutely defensive right now. But if you look at the sharp declines that are being seen on the Nifty, BEL is down nearly 2%. Hindalco, Infosys, Adani Ports, IndusInd Bank are the top losers at this point in time. Even the PSU stocks are lower by 1.3%. But let's look at the heavyweight counters. ICICI Bank. Remember, post earnings, we have seen a reaction coming in today. 0.4% of an uptick. This comes also after brokerage houses like Kotak Institutional have given a buy call and a target of 1500 on ICICI Bank post the earnings that have come in as well. Let's also look at some of the other banking names. IDFC First Bank, for instance, and Yes Bank. This is where we've actually seen, the net profit come down 52% from last year for IDFC First Bank, another 4.3% lower for this stock. Let's look at Yes Bank. Again, here the net profit is higher than the estimates at 621 odd crore rupees, but the retail book has seen some kind of a weakness on that front. And therefore, you see 1.5% of an uptick on Yes Bank right now. Markets are further slipping, 22,918 now. We're 172 points lower in trade at this point in time, and some of the heavyweight contributors as far as the market losses are concerned. Let's look at what is creating this pressure on the downside for the markets right now. Well, it's HDFC Bank that is the top contributor. You have Reliance Industries that's down 0.8%, Infosys that's down 20 odd points, that's contributing about 20 points to the lower end as far as the Nifty is concerned. Bharti Airtel, M&M, NTPC, these are the top contributors on the lower side for the Nifty. Only 4 stocks are contributing to the positive side on the Nifty, and that's ICICI Bank, HUL, Britannia, and Dr. Reddy's at this point in time. Let's welcome also Vaishali Parekh, who's joining in on the show with us, Vice President Technical Research and Analysis at Prabhudas Leeladhar. Good morning to you, Vaishali, and thank you so much for joining in. Well, another sign of weakness that continues. We have started this budget week on a lower note. What's your sense?
Oh, very good morning, Swati, and very good morning to you too. I think, yes, so Friday was an indication that we were going to see a weak start this week, because so many times we saw 23,000 was being challenged and there was no respite. So I think, and the trigger was given by Reliance and HDFC Bank, which were showing signs of corrective move. So I guess there is still some more downside. Technically, we are looking at 22,800, 22,600. That's the range that we are looking at. And wait and watch. Right now, Bank Nifty is still holding on. So I would say, let's see if it breaks 47,800 levels. That too could give in further selling pressure. So right now, it's a weak bias.
Okay, got that. Vineet, of course, again, all across we are seeing losses come in, barring some of the gains that are coming in on the FMCG pack today. Britannia, HUL, Nestle, ICICI Bank on earnings, and Dr. Reddy's. These are the 4-5 counters that are probably contributing to the higher start. Should the markets turn, should the investors also turn their portfolios to more towards defensive side amidst all this uncertainty? Is FMCG something that you're looking at all?
So, my bet would be to go with the defensives, that is the pharma pack, and not the FMCG. Although FMCG valuations are there low, but we are seeing a dearth of consumer demand coming in. So it's a pharma pack for me, and there are several names out there that will attract attention.
Absolutely. Let's again look at some of the stocks right there. Vaishali, I think Realty is bucking the trend, about 0.6% higher. Do you think this is a safe zone to be in right now?
I don't know really, because this could be just a bounce back. I would rather go on FMCGs like HUL and all. Those are quite beaten down and they're showing strength. So I guess FMCG should be what one should look at.
Right. Vineet, coming to you on ICICI Bank post earnings and the large banking names that have come out with the earnings thus far, what does that indicate to you, and where would your preference lie now?
So, if you really want to buy banks, ICICI Bank has put in a splendid performance. I
Hmm.
think Bank of Maharashtra has put in one of the best performance. We've just come out with a buy. We think that there could be a 20 to 30% upside over the long term.
Okay.
And but the other banks don't evince our interest. I think Axis Bank could be a massive underperformer going ahead.
Okay, got that. Let's also look at the NBFC space right there, Vineet. How about stocks like Credit Access Grameen, AU Small Finance Bank as well? How are you looking at this smaller space within the financials largely?
So, we need to get a little sense of how the collections are going. uh, unless and until there is any uptick in that, it's difficult to take a call. I think somewhere in the first week of Feb is probably the time to take a call on that same.
Credit Access Grameen viewers 16% lower at 767 right now. This is after. Remember, the company has revised again the loan growth guidance to 7% from 8% earlier, and from 8% to 12% earlier as well. The net interest margin guidance, however, has been retained, but this loan growth guidance has probably again led to the weakness coming in, the MFI concerns that continue right there as well. Vaishali, Credit Access Grameen, should one stay away after this dip as well?
Well, we are seeing a new round of selling coming in. So I guess, yeah, for now, stay away. But all the same, technically, there is also a positive divergence coming in at these levels. So I guess one can look for a bounce. So I don't think it's worth any attention right now.
Okay. Erstwhile favorites are also losing a bit of ground. Look at CDSL, for instance. It's opened about 6.5% lower in trade. Vineet, this was emerging as one of the favorite spaces in 2024. BSE, CDSL, the way we saw the capital markets focused stocks really provide a lot of strength to investors' portfolios. How would you approach these stocks right now? Do you think enough is already priced in? Now things have to just find their feet on these kind of stocks, or should one look at them in these dips?
I think, you know what, these plays on the stock market are going to be having a bad time going ahead because, our view on the markets, as we spoke just earlier, is not that sanguine. And, there is a case of overvaluation here in the case of CDSL. So
Yeah.
we think that the stock can come off quite a bit.
Okay, got that. That's the small caps that are losing a lot of ground now, 2.5% lower for the small cap index. That's where the bigger beating is really coming in. Barring the three stocks, Reddington, Cyient, and RK Forging, rest all of the stocks are actually lower as far as the small cap index is concerned. Of course, it is Credit Access Grameen as the top loser there. CDSL we've already marked. Trident is lower. ITI 5% lower. Blue Star, you have Loris Labs, Tejas Networks, Keynes Technologies, CAMS, these kind of stocks. Even Garden Reach Shipbuilders, they're all lower in trade within the small cap index right now. How about the stocks within the EMS space right there, Vineet? How are you looking at them? Dixon, Keynes, again, post earnings, we've been seeing a volatile move on this entire front. What is your entire approach here?
My entire approach here is to, be very, very, let the budget come out, and let's take stock of the situation then because their, valuation multiples are quite high. So we would like to just wait out on the entire market as such.
Right. Okay. Vaishali, FNO space, where the gains are being seen are Bank of India, DLF, Macrotech developers. You have even Torrent Pharma and Britannia. These are the kind of stocks that are buzzing. But on the lower end, again, we've discussed CDSL, IDFC First, AU Small Finance Bank, where earnings largely have also slipped. How are you looking at the FNO space clearly today?
So I would say again the safe bet. I would go for Britannia, things like that, because well, what's the hurry? Let's see market stabilizing, and then we will take a call. But for now, I maintain a positive view on FMCG. And having said that, even Bajaj Finance is comparatively showing good strength. So I would focus on that. 7,000 would act as a support.
Okay. Vineet, coming back to you, and I will ask you on Indigo right now. Of course, the net profit was down 18% odd. This was also below the poll, but we've actually seen the EBITDA improve further, 10.5%. The stock is also in the positive zone today. How would you really look at Indigo? 1.2% higher at 42.11.
Uh, it's a great stock. We like the company. They've been cutting corners. But despite that, when the numbers are not coming in terms of, the PAT numbers, I'm a little worried out here. I would want to, assess the situation, as I said, post the budget.
Post the budget right there. But when we discuss the budget, Vineet, any key pockets where you believe the focus should be post the budget, for investors? I mean, we have really not seen a pre-budget rally unfold at all this time around. Even if there were initial signs, maybe in a railways or defense space, that's also lost ground because of the larger uncertainties that you pointed out right in the first answer itself. Do tell us, then what is the ideal budget strategy for investors should be? Should one absolutely focus on the long term, forget about this near term budget this time around? Are there any big bang expectations from the markets per se?
So, you know what? There are a couple of things that need to be brought to the viewers' attention. One is that, the sacrosanct figure of the fiscal deficit. Now, the government is not going to let go of that because that has been the general approach towards, the managing the fiscal deficit. But, with all these freebies being thrown around and the balance sheets of state governments, the way they are getting, jacked, I think that the everyone will start questioning the number because we already seen uh, capital investment slow down while the revenue expenditure has picked up. And in November and December, we had inflation of food inflation of 9-10%. So, it really remains to be seen how we will be managing this entire thing. And for me, that is a quandary for me. And I would be watching the budget and analyzing the numbers very closely before, coming to a buy call on the market because something has got broken in the Indian financial system.
Hmm. Okay, noted that. Let's look at the broader markets. Within the gainers, you do have some interesting names. Let's just point them, even though they are very far and few between. DAM Capital Advisors is up 10.5%, even in this extremely weak market. Gujarat Ambuja Exports is up 8.5%. Then you also have stocks like Parswanath Developers, that's up some more within the real estate pack like Landmark Properties. Those are also up and about in trade. DCB Bank, in fact, this is one is interesting because the earnings were good for this one. It's actually up by 5%. This is after the profit went up 19.5% for the company. Net interest income was up 14%. Gross NPA came down as well. Net NPA also improved for the company from the last quarter, and therefore we are seeing some improvement coming in on DCB Bank. Then you also have Swan Defense, that's up by 5%. Premier Limited is up by about 5% odd. RPG Life Sciences, that's buzzing in trade. Bank of India, we've already marked as something that's been buzzing. Vaishali, anything within the broader markets that looks good?
I think there
No.
is tremendous weak bias, so I would say let's wait.
Difficult to take a call at this point in time whether this is a bounce and that will sustain is what Vaishali really points out to say then. Okay, Vineet, coming to you on the broader markets, the mid and the small caps which are taking a bigger beating right now in the kind of market fall that we are seeing on an everyday basis. What's your approach here? Now the small cap index is down 3% today.
So I think the excesses that we have done over the past couple of years in terms of valuations, they are being corrected. And we have always seen excess on one side leads to excesses on the other side also. So, expect some, we would like to see valuations really turn mouth watering before, we really venture into that space.
Absolutely right there. Okay, so let's look at some of the other stocks then. Okay, FMCG and Realty. Now, the two sectors which are actually hovering higher. India VIX, remember viewers, is 6.5% higher at 17.8. Keep an eye out on that. That is the place that you are getting all the fear signs from right now in the markets. FMCG, within that, ITC is something that I wanted to discuss with you, Vineet, amidst this new listing that's expected. How is your approach right here?
The ITC hotels,
Yeah.
I think we are quite constructive on ITC hotels. We think that that is one segment which will do well. Uh, you know, it's one of the top few chains, that is there. And the commentary from Indian hotels was also very, very strong. So we expect the chain of hotels to do well. ITC is one such stock that should do well.
Okay, ITC hotels could be in the positive zone, and that's a constructive opinion that Vineet has on the hotel space right there once the demerged entity is with us. Vaishali, when it comes to the tour travel space, this has been one space that we've discussed so much. Mahakumbh is on. The demand clearly we know is high. But even in this weak setup in the markets, would you gain confidence of going big on this space as well? Or is it only for the extreme long term viewers to focus on this space too?
No, so I would say actually, I have been tracking Indian hotels, and in spite of all the selling that we are witnessing, Indian hotel is still holding on. And I had told you last week also, Sakshi, because there was some corrective move coming post results, but 740 acts as a very good support. So if 740 is held on, then I think the stock is worth having a look to start buying.
Okay. Vineet, we do know that we have to let you go, but before letting you go, I'll ask you just one last question. From the budget, what is it that could just make or break, be a make or break for the markets right now? What is it that one could be really looking at in the positive zone, and what is it that one could look at as a major negative trigger?
So I think if we do not get any SOPs for the middle class in terms of income tax waivers, because it is assumed that it will be done with. If that is not done with, then it will be a deal breaker for me. And I would like to see the government come out with extremely bold initiatives to kickstart the Indian economy, just like they did when the 2020 COVID budget was declared. It was a rabbit out of the hat, and we had a 4-year bull run. We need to see whether we get that kind of thing going.
Right, Vineet. Well, thank you so much for your insights right there. We will catch you around the budget to get more sense of how should the markets be really looked at as we approach the big day. This is going to be Saturday, a full markets day as well, when we will see the union budget finally take shape and give us the indications as to how the markets can really go forward from here. All right, we'll start now again looking at some of the key stocks with Vaishali and do some stock spotting even in this kind of a market. FNO, let's look at Balkrishna Industries. Fresh move, 2.2% higher. Is this sustainable, Vaishali?
So I think Balakrishna currently at 2700 levels, and amidst all the tire stocks, this still looks stable. It's only consolidating. So I would say 2600 acts as a support. And this stock, if it continues with its momentum, because volume has been good enough last week, so I guess this can show a bounce towards 2850.
Got that. But Vishali, coming back to the Nifty right now, wanted to understand, of course, how are you approaching the expiry, which is going to be right ahead of the budget too, and where do you see the markets headed? We've already breached this 23,000 for the third time in the last 1 week odd or so. Now that 22,900 is being seen as something which is, right here with us. How much more downside would you expect, and by when do you see finally the markets could start finding their feet?
So according to me, as I've been repeatedly saying that, well, we are seeing a projection of 22,800, 22,600.
Okay.
So these are the levels. I mean, a little bit here and there because that's the support band that we are looking at. So according to me, 22,500 is the level that one should definitely look into, and that would bring decent correction market into deep oversold also. One, if it's a regular corrective move, I think Nifty would see a corrective move of around 13 to 15%. So that is the level where I think one can start buying stocks.
Right. But help us understand from the trader's perspective, Vaishali, for those who are going big on shorting the markets currently, what is it that they should keep in mind?
I don't think now is the time to go short. Last week was good enough an indication because now, as you see, Sakshi, each and every sector is quite oversold, and you never know what sprouts up. So I would say, well, even if you're doing it from an intraday perspective, keep your stop losses tight. Wait for a market to bounce and see whether are we sustaining, or those would be the levels to go short as a fresh selling counter. But see, even volatility index is on rise, and normally we see in such extreme cases when budget is around the corner and all, it does go to around 21, 22 level. So I don't say that one should not go short, but wait for a little bit of a rise and then go short. So that would give your risk reward ratio will be favorable with a limited stop loss.
Okay, got that. You know what's catching my attention is again the real estate stocks. Many of these we have discussed in the past with you, Vaishali. Macro tech is something that you've always been having had a positive view on as well. DLF is again climbing in the FNO space about 2.5% higher today. There are several others that are also finding their feet. If one has to understand, what are your preference stocks here? What would you say? Will it continue to be macro tech?
Macrotech also Godrej Properties.
Okay,
Because if
Godrej
you see,
Properties.
it's really corrected substantially, and right now, the indicators it's showing a positive divergence. That means there is an exhaustion in selling. So yeah, these two stocks will be my focus.
Got that. Okay. So that's as far as some of the real estate stocks that are actually buzzing. DLF is now up 2.5%. You have Macrotech that's up 0.4% odd. And some of the others, like even Godrej Properties, is what Vaishali marks, is something which she's keeping a keen eye out on the positive side right there. Coming back to the FMCG counters, there is Britannia that's up today, 1.7% higher, top mover on the Nifty. You have HUL that's 1.2% higher. You have ITC that's up. Now even Dabur is pulling up in trade as well. How would you approach this one, the FMCG space largely right now, and where would your preference stocks be? We've seen earnings come through for some of them as well, but again, there aren't any exciting, enthusiastic indications from the managements also on the sharp revivals or the green shoots being seen yet. How would you approach it?
But I would say, actually the worst is over if you ask me, and I think this sector could act as a defensive. So to
Okay.
start with HUL, in fact, even Tata Consumer was one of the stocks which we had recommended, and it's still holding very well. So I would say that yes, these are the stocks which, in an uncertain market like this, would be the ones which would be contributing to the index.
Got that. Some more stocks that are pulling up in the Nifty. You have Maruti Suzuki that's up nearly half odd percent. SBI is pulling up into the green. You have Ultratech Cement, which was also buzzing around the earnings last week. L&T is up now in just minor gains that can be seen here. Dr. Reddy's we've already discussed. That was also up and about. So let's discuss some of these pockets now with Vaishali. Vaishali, first up, let's discuss the cement pack. Ultratech Cement is something that we were discussing even last time around, close to the earnings. Now, post that, you also were looking at JK Cement, if I'm not wrong. Is that something that was on your radar
Ramco
last time?
Cement, Ramco,
Ramco
Ramco
Cement.
Cement.
Ramco Cement. Okay. Give us a sense
Yeah.
now. How are you looking at the cement area?
So I would say Ramco Cement still holding on. I mean, good corrective move and respecting the 200-day moving average. So 850 is a good support to look at, and I guess this could be a good buying opportunity. And also is the case with Grasim if you go to see even JK Cement. So all these are quite beaten down, and of course Ultratech being the master. So I would say yes, cement should be the stocks that one can look at for a long-term perspective.
Okay, got that. And within the PSU banks, how are you looking at stuff? I mean, like, are you looking at SBI? Are you looking at Bank of India? Are you looking at Bank of Maharashtra? Something that even Vineet was mentioning. How are you looking at the PSU banking story unfold?
So I would say SBI, well, 740, 720 Nifty acts as a very good support. Even today, we are seeing that it's attempting to show a bounce. So SBI, these are very good levels to consider for a long-term perspective. And along with that, even Bank of Baroda, if you were to see, Bank of Baroda also has corrected quite a bit, and right now it is at 220. So, and see, the I would go and sync with Bank Nifty because Bank Nifty is not showing that much of a corrective move. It's holding on very well. So I guess, to my understanding right now, as it holds, Bank Nifty is done with its corrective move, and maybe we can see if market has to witness further selling pressure. I think it's time for IT to participate. That's my understanding. Now let's see if Bank Nifty breaks 47,700, then well, we will see further selling pressure coming in these stocks as well.
Okay, got that. There is a recovery from the lows, about almost half odd percent for the Nifty Bank. We have inched higher now from the low of the day, and we are now at 48,065 as far as the Nifty Bank is concerned. There is also a slight recovery on the major indices again, on the Nifty and the Sensex also from the low point right there. But again, nothing can be really short said as to this is going to be a clear, reversal of the morning lows. One cannot say because one has to really see. What has been a usual trend, Vaishali, I think last 1 week, 10 days odd, is that the first half of the trade usually is very, very volatile, but many of the days I've actually seen the second half pull up in trade on many days as well. For those who are the intraday traders on the index level particularly, what should be on top of their mind when they trade?
Well, first of all, now, as I said, it is a gap down opening, so it's very
Yeah.
difficult. But yet, to those who want to really go short, should keep a stop loss of 23,100.
Point noted right there. So do keep your stop losses very, very tight at this point in time. That's the clear view and the advice that's coming in from Vaishali. There is no need that you burn your fingers in this kind of a market right there. 22,974 right now as far as the Nifty is concerned. Any key stocks then, Vaishali, that you're looking at where one can still safely look to trade even in this volatility today?
No, not really, Sakshi, because as I said, positional trade is okay as
Oh,
long
fair
as
point.
we. But one can go sell short on Reliance because Reliance is continuing to go weak. So Reliance is a sell short strategy. It can, in all likelihood, it can retest the previous low of 1200 levels.
Okay, got that. So
And
there you have.
1245 acts as a stop loss. Yeah.
Okay. So Reliance is something that you could be looking at right there. FMCG Realty, the only two pockets with some green signs. Rest of them have all slipped. Small caps still hovering over 3% lower. Mid caps have lost further ground, now 1.8% lower in trade. What has lost ground in mid caps? AU Small Finance Bank, IDFC First Bank, Hoodco, MRPL. You have even Paytm that's down by about 3.6% odd. Vaishali, Paytm for you, how are you looking at the fresh trend?
So Paytm has broken its previous low. So I think it can go. 750 would be the next support.
Okay, got that. What else is losing ground is fact. Remember these fertilizer space stocks that we were thinking that will at least pull up pace. They did show us some signs from the budget related cues, but again, they are coming under pressure. Even RVNL, stocks like Mazagon. So the erstwhile stocks that were thought of that these will be the pockets that will again probably find their feet ahead of the budget, again losing some ground right there. PSU stocks 1.5% lower for the index. Coal India is down, ONGC, NTPC. In fact, let's discuss NTPC and NTPC green both. I know the green one will not have any long term historical charts for you to study, but the earnings came in right there, and I just wanted to highlight that for all our viewers. NTPC, the net profit just was up at 3 odd percent, but it was slightly below estimates. Again, revenue was also up by about 5%, but below estimates right there. EBITDA came up 20% for the company at 11,960 crores. Margins also improved to 28.9%. For NTPC Green, the profit was up 52% at 89.4 crores. Revenue was up just about 4%. EBITDA, however, was down, and the margins also came down in trade. So mixed results as far as green is concerned. And higher growth as far as the NTPC parameters are concerned, but they were again below estimates right there. What would you say on NTPC particularly, Vaishali?
I think NTPC, if it has to hold any meaning, I think this level should be held on. So 320 should act as a good support. If 320 levels break, then 300 would be the next support. So in my opinion, I think it's unaffected by the results, and also I guess this should hold on as a support.
Vaishali, mid and small caps further losing ground. Is this a no-go area right now for the markets and for the investors?
So I would say Nifty mid cap, if we were to talk about, I think that is losing its ground. 5200 acts as a final support. So even if I'm drawing the long term downward trend line, 51500 should be the level to see. If these level break, then that could call for a further mayhem. So I think, according to me, 51500 as a bottom should be respected.
Okay, Vaishali, let's look at some of the other pockets then, which is probably looking better at this point in time. Are there any stocks? Okay, RPG Life Sciences on the positive side. Vaishali, let's look at the chart here. We rarely discuss this stock, but it's again shot up about, it's in double digits, 11% higher, 2316 for RPG Life Sciences. What does the long-term chart here suggest to you?
So, well, of course, after a long consolidation today, we are
Hmm.
seeing good volume and a good candle. But what is required is that it needs to sustain about 2400 levels. That could bring confirmation for the stock to have further strength. So, yes, 2400 level is a level to watch.
Okay, got that. So that's as far as RPG Life Sciences is concerned. Just wanted to pull that up for our viewers. After a long-term consolidation, the stock was up in trade today. What else is buzzing? L&T from the Nifty, half odd percent higher. Long forgotten stock, Vaishali, within the large caps, L&T now half odd percent higher. Again, this is one of the stocks that definitely reacts positively whenever there is the budget announcement on infra stocks, the outlay, the capital intention, capital outlay intention that the government has. What would you say on L&T at 3478?
So, of course, the trend is down, but technically speaking, I would say that 3250 acts as a very good support. So, if I'm looking at the weekly chart, also the stock moves on its own accord. Like a little bit of like consolidation is going on. So, on a longer period time frame, also 3250 acts as a very good support. So, if one were to buy for a long term perspective, one can start accumulating from here on.
Okay. First half an hour candle is out now. Vaishali, do tell us takeaways from the first half an hour for the markets today and the investors.
So, Sakshi, I would say that, well, these are the opportunities. Trading is not always a must, but I would say these are the opportunities if one were to start considering buying from with a long-term perspective. These are the levels that take advantage of, look for good fundamental stocks and start accumulating from here.
Start accumulating from here on. These are the long-term opportunities that you're getting in the markets right there. Even if you do see some bit of losses from here on, those will be seen as opportunities to accumulate and go long if you have an absolute long-term horizon right there in the markets. Well, Vaishali, we will thank you on that note for being with us on this morning edition, sharing with us your thoughts, strategies right there. As viewers, you all know that the market setup is currently still looking weak for today. Only Realty and FMCG is in the green. Rest all of the sectors have pulled down. 22,988 right now on the Nifty. We've definitely improved from the morning low on the Nifty Bank as well, but still half odd percent lower for both these indices. Broader markets in weaker setup. 3% lower for the small caps, nearly 2% loss for the mid caps as well. Those are the pockets which are seeing a bigger beating right there. As Vaishali did point out, it's an absolute stock selective zone, and even there you need to have an absolute long-term horizon for the investors. It is a time to go positional and not intraday. In trade, we do not know how these wild swings are playing out on an everyday basis right there for the markets. Let's look at the top movers. We have Britannia, ICICI Bank, HUL, L&T, and you also have SBI as the top 5 movers on the Nifty. PSU banks are garnering strength thanks to SBI, and some of the other pockets like Bank of India pulling up in trade. What else is pulling up on the Nifty is Asian Paints, 0.5% higher, ITC, Ultratech Cement, Bajaj Finance and Maruti. But those are the handful stocks that are actually up into the green as far as the Nifty is concerned. When we look at the lower end now, viewers, look at JSW Steel, 3% lower, 2% loss for Power Grid, BEL, HCL Tech, IndusInd Bank, varied stocks that are actually declining in trade. The heavyweight counters that are pulling down or putting pressure on the markets right now, clearly HDFC Bank, still contributing about 21 points on the Nifty on the lower end. Reliance contributing 24 points on the lower side as far as the Nifty is concerned. Infosys is contributing 14 points on the Nifty on the lower end. Bharti Airtel, TCS, HCL Tech. These are the top 5 contributors on the lower end. But some contributors are increasing in count for those which are contributing positively to the Nifty. Remember, there were only 5 initially. ICICI Bank, L&T, HUL, and now you have SBI, ITC, Britannia, Asian Paints also providing some support to the Nifty right now. We are definitely off the lowest point in the first half an hour of trade, but whether this will sustain is something that we will continue to get you to hear from all the top market masters that we have. Throughout the course of the day, market conversations will follow, earnings conversations will follow, so stay tuned on Business Today television for all the action.
Good afternoon, ladies and gentlemen. Welcome back to Market Today. We are on the earnings cycle for the third quarter, and joining us on the show is Miss Akila Balachandar, CFO for Greaves Cotton, a stock that has been in great demand and in great news. First, let me just show you the quarterly numbers. Sales for the past quarter gone by are up 13%.